So there's this brand new space company that just hit the stock market, and it's this wild mix of top secret military contracts and professional baseball. The big question is this thing a rocket ship for your portfolio, or is it a black hole just waiting to suck up your cash? Today we're going to break down the newly public York Space Systems and see if it's actually a smart long-term investment.
And right out of the gate, we're talking big numbers. I mean, right after its IPO in late January, the market decided this company was worth nearly $5 billion. Think about that. That is a massive valuation, which means the stakes for investors are incredibly high from day one.
Now, here's what's so fascinating about these guys. They kind of have a split personality. On one hand, you've got this super serious U.S. defense contractor, right? They're deep in the Golden Dome missile defense system. But on the other hand, they're sponsoring the Colorado Rockies. They are the first aerospace company in history to slap their logo on a pro sports jersey. It's this bizarre, fascinating mix of secret government work and very, very public spectacle. So, to figure this all out, here's our game plan. First, we'll look at the company's backstory. Then, we'll dig into what they actually do and how they defend their business. After that, we're decoding the financials, figuring out if the stock price is just hype, and then we'll see what the chart itself might be telling us before we wrap it all up with a final verdict.
All right, first up, is a star being born here? Let's get to know the company that's making all these headlines.
Okay, so here's the snapshot. York went public in January 2026, and the stock pretty quickly found its footing in that high 30s range. As we said, they're a key contractor for that huge Golden Dome project, and they've got that one-of-a-kind Rocky sponsorship. But the real key here is that they are vertically integrated. That just means they do the whole shebang themselves, from designing the satellite to building it and flying it.
So how does this work as a business? And maybe more importantly, can they defend their turf? In this next section, the business and its moats, we're going to look at what York actually does and whether anyone else could just come along and do the same thing. You see, their core business is what you'd call a turnkey solution. For a customer like the Department of Defense, this is a dream. York handles everything: the initial design, the manufacturing, and even operating the spacecraft once it's in orbit. It's basically one-stop shopping for getting stuff into space.
And this is how they protect that one-stop shop. They have these incredibly powerful competitive advantages, or moats. We're talking about huge regulatory hurdles, like security clearances that are a nightmare for any newcomer to get. Then there's the relationship moat. They're a prime contractor with the U.S. Space Development Agency. You don't just earn that trust overnight. And finally, they've got proven tech, like connecting the military's crucial Link 16 data network from space. That's a huge deal. Okay, so the business model looks solid. The moats are deep. But you know what they say? Follow the money. Does the money trail actually support this awesome growth story? Let's decode the financials. And on the surface, things look fantastic. I mean, just look at this revenue growth from $238 million in 2023 all the way up to $386 million in 2025. That's a 62% jump in just 2 years. The story on the top line, it is absolutely compelling.
But, and this is a huge but, when you look at the free cash flow for 2025, the number is negative $130 million. Now, free cash flow is basically the company's take-home pay, right? It's the real cash left over after you pay for everything you need to run and grow the business. And right now, they're burning through cash, a lot of it. This is the central problem in their financial story. Tons of money is coming in the front door, but even more is flying out the back.
And that cash burn leads us right to the biggest question of all for any investor. What is this company truly worth? It's time to talk about the price of hype. And folks, this is where the rubber really meets the road for a potential investor. Take a look at this gap. The market, right now, is pricing the stock around $37 a share. But when you run a conservative model to figure out what the business itself is fundamentally worth, you get a number closer to $21. That is a massive, massive difference.
You know, this quote from the source material just hits the nail on the head. A value investor is always looking for a bargain, to buy a dollar's worth of assets for, say, 40 or 50 cents. But with York right now, you're looking at the opposite. It's like paying $1.50 for something that might only be worth $1. But hang on, fundamentals aren't the only way to look at a stock. What if the market itself, the chart, is telling us a completely different story? Let's check out an alternative theory.
So this view is based on something called Elliott wave theory. It sounds a little out there, but the basic idea is that markets move in these predictable, repeating patterns of 5 waves. Waves 1, 3, and 5 push the trend forward, and waves 2 and 4 are little pullbacks.
The theory suggests New York just finished a really strong push-up in Wave 3, and it's now in a temporary pullback. That's Wave 4. If this theory is right, there could be one more big push higher, Wave 5, still to come.
And this table translates all that theory into actual numbers you can watch. That pullback, Wave 4, is expected to find a floor somewhere between $32 and $34. If it bounces from there, the next target could be way up in the $52 to $56 zone. But, and this is super important, if the stock breaks down below 24 bucks, this whole bullish theory is toast. It's invalid.
So, where does all of this leave us? It's time for the final verdict. And honestly, this all boils down to a classic battle, a fantastic growth story versus a disciplined value play. And the real question is, what kind of investor are you?
See, on one side, you've got the growth investor. They're betting on the amazing story, right? They see the trends in space defense, and they see that potential market momentum from the Elliott Wave chart. But on the other side, you've got the value investor. They see that expensive price tag, they see the negative cash flow, and they're sitting on the sidelines, waiting for a massive sale before they'd even think about buying.
And that brings us to the final billion-dollar question you have to answer for yourself. Is York Space Systems a great business that's actually available at a great price? Or is it just a great story with a price tag to match?